From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May the 5th, 2017. In just a moment, we'll be taking a look at the GBPUSD, Great British Pound versus the US dollar for today's trade analysis. But first I want to recap one of the trade suggestions I've made over the past couple of days here on the USD CAD. We have some significant news today out of both Canada and the U.S. with Canadian employment change and unemployment rate, and of course U.S. non-farm payrolls, earnings, and unemployment rate as well. So this currency pair specifically could get volatile today. If you're in the trade, the buy, the long from the blue shaded area, it's touching the orange zone, our target, you should begin closing profit, moving your stop loss to protect profit. We're sitting about 90 pips on the trade right now, so be sure to protect that profit before the significant news coming up at 8:30, about 35 minutes from the recording of this video. So take note of that. That being said, moving over to the GBPUSD, of course, it's important again to note the significant U.S. data being released today. If it's significantly positive on all three accounts, then we likely look for a good boost for the U.S. dollar, and this currency pair specifically would go down. If it's negative on all three accounts, we would look for this currency pair to potentially go higher, break through the resistance and go higher. So what we want to do is make note of where our support resistance levels are, our decision zones, the colored shaded areas on my chart, and then make our trade decision based on what happens at 8:30 with all of that news. You know, higher earnings, higher jobs, lower unemployment, all that would be good news. We expect it to bounce off resistance and go down. So we have been actually in a short since yesterday, and really all week long we've been looking at the resistance level into the green zone at the top of the chart as an opportunity to go short. Currently we're sitting about -8 pips, but we have seen about 19, almost 20 pips of profit on the current position and the entry from 1.2920. Let's go ahead and zoom in a little bit here on this. We are at the very top of the trend. Actually, let me zoom out real quick and show you. We're at the current high of the current trend, the blue trend, highest peak high. We can't get much closer than what we are right now into the 2950. So we're at the peak high. It's difficult to go long and buy at the high of a trend unless we see the breakout of the green zone. So let's go ahead and zoom it in again here, and we can get a real good handle on what's been happening. Of course, we had the box down here that we traded last week, the buy from the orange zone. If you bought the yellow zone yesterday, you're of course in profit, and you should be protecting profit. If you took the short from the green zone, which of course was a logical scenario as well, then again, like I said, we've seen 18, 19, maybe 20 pips of profit depending on your broker's data feed as it dipped down today. Unfortunately, didn't get deep enough to take our trade to break even. We'd be out of it now if it did that. But right now, watching it, keeping an eye on the news, positive news would send us back down. If it's negative, we'll likely look for the breakthrough 1.2950, the green zone, breaking through these resistance levels, and the target first off comes back up into the 1.3000 level. That's the purple shaded area up here at the top. Let's take it down to the 4-hour time frame, squeeze it back out like this so we can see that entire box there. You can see 1, 2, and now the third time coming up into here as resistance. This little wick right here, remember where our entry is 2920, so from 20, well, let's just measure the low of this candle. The low of that candle is 2,900. So we did see almost 20 pips of profit on that trade, on that spike right there, and then it turned right back around and came up. So if it had gone down 2 or 3 more pips, we'd likely be out of it from our break-even stop loss. But anyway, as long as it stays within and under, and positive news for the U.S. today, I'm expecting a turn back lower and maybe even a target back down to the yellow zone or lower. And if it becomes a negative sentiment for the U.S., we'll look for the breakout. So if it breaks out, of course, our stop loss is currently above the green zone. So if it breaks out, we minimize the impact to our trading account, minimize our risk, get out, and look for a new opportunity. But for the time being, we have the opportunity to either close the trade with very minimal loss. You could do that, or wait to see if we get a positive movement for the U.S. dollar. All those are possibilities, but once the news hits and we see what the sentiment will be, we'll have new opportunities, either a break above the green zone for buy scenarios or break below the green zone for a continued profit down towards the yellow shaded area today for the pound dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.